The following segment is sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. LT Gray Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at ltgraysilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Also, it's good to be with you.
It was just over a week ago or so when I asked you if we were going to see $19 silver, and you said it was possible, and we're there.
Well, yes, if I go back to what's been a very trying couple of years, especially here the last few months, I looked at the long-term silver chart, and I did it for the members, and I showed where silver broke out at 555, went up to 840, it touched the 555 level. So in other words, it touched the breakout point. Then it went up to, I forget the number, 12 something, and then, or maybe 15, and it came down and touched the breakout point of the 840. And then it went up and hit the $21 level, I remember that, and then it came back down. It came all the way back down and touched like the 840 level, below 9. So what this suggested was that every time it makes a massive move up, it comes back down to the previous breakout point. Well, the last breakout point before the move to $48 was around 19, which suggested that it could hit the $19 level, and lo and behold, it did. In fact, I bought some silver at $18.83 yesterday. I just thought, you know what, enough is enough. I think silver is still a great long-term investment. I was able to lock in at $18.83, and I did so.
Where, when silver was at its recent high, did you sell it, if in fact you did?
Well, when it got up to the $48 level, which is more than 2 years ago, I called that top very accurately, and at that time I did hedge. And unfortunately, I didn't hedge long enough. In other words, I should have rolled over my hedges. But yeah, I did think it was a blow-off top for a while. As I looked at it as time progressed, I thought, yeah, it could probably go 2 years, perhaps longer. I think we don't have much longer to go, but it's getting a little unbearable. And so, yeah, I did protect my position when it got at that level. And again, could have done a better job of it, but I did do it. In fact, I was doing a workshop in Los Angeles, right by you, Ellis, about the time that we hit that $48 level, and I put out the sell. I didn't sell any physical. I hedged on paper, and I have been buying, and I have bought in the 30s. I haven't bought in the 40s, but I did buy in the low 30s, and I've bought in the 20s, and I've bought under 20. So I have been buying along the way.
Now at $18, $19 an ounce silver, aren't we seeing 2006 or 2007 levels?
I have to go back and look at the chart, but yeah, we're seeing it undervalued as far as all cost in basis. We did a study in the Morgan Report, as you know, as a subscriber. And so, I think you're safe to buy here. It doesn't mean it can't go lower. I think it can go much lower, and I don't think it can stay down much longer. But again, it's getting frustrating for, I think, everyone.
And we just spoke either last week or the week before about the cost of getting silver out of the ground and putting it into production. Now, costs have gone up over the last years producing silver. We're nearing the point where some companies can't really afford to produce. And according to the Morgan Report, which I'm a subscriber to, one of these companies is in fact suspending their operations. One of the companies that you're following.
Right. It was one of our speculations. Very high grade, Canadian company. Like the geographic area. We like the grade a great deal. We like high grade. Just had gone into full production. They have a little bit of a debt burden. And we were getting a fair amount of questions. If we get, our paid subscribers are allowed to send in emails to us at a certain level of membership. And we had talked to the company recently, and yet the day that we issued the Morgan Report, which I issued early, which I seldom do, but I'm speaking in Dallas in the next couple days. And the day we hit the send button and put it up on the website and issued the release to our members, this company says it's going to go on care and maintenance. And so we have some upset subscribers, and that happens. I mean, everyone's pretty tense right now. I mean, any precious metals investor, myself included, I think, is pretty hard to stay calm. But nonetheless, it's speculation. If you do what we teach, which means bet a little, win a lot, and certainly get more than one, have at least 5, if not 10. You can be upset, but you shouldn't have gotten hurt too badly. But still, it was a bit of a blindsided. I mean, we just set on an alert, as you know, because you're on the service that provides that alert that just pops up right on your desktop or your laptop. and says, hey, David DeSeno alert. And they said because the company had reached production several months ago in full capacity, a little over 1 month ago, we were as shocked as many of you at this action. Certainly we thought something with this high grade would not be one to cave into what may turn out to be the bottom of the silver market. Yet it did take place. So no excuses. I mean, we stand up when we, make a mistake. I mean, you could say we made a mistake picking this company if you want. I don't think it's a mistake. The asset's still there. They're just saying we have some debt. We're going to just put it on care and maintenance. They just got started, too. So really, since it's just sort of like starting up a race car engine for the Indy 500 and going one lap and saying, you know what, we're not going to do this race and pulling off the track. You don't have a lot to lose at that point. You're out of the game entirely. Whereas if they had gone half the race, you're sort of committed. You got to keep going. So anyway, it happens. I apologize if you want to hear that. I'm not selling mine. We said sell it because it's probably the best thing to do at this point. But since I just have so little in it, I'm just going to keep it, and that way I have to watch it.
So evidently some companies that are producing are in a little bit of trouble right now. What about those near producers that are not quite there yet? They may have been financed recently and are in the process of identifying their resource and working on getting it out of the ground. Are they in less danger at the moment?
Yeah, I think the safest statement I can make is that I think everybody has potential jeopardy here. I mean, you look at Barrick. Barrick put out an announcement that they're cutting back staff and they're reducing some of their situations. So that's one of the biggest on the board is Barrick. I'm not favorable to Barrick. In fact, we did a special update for the members only on a very, what I consider, tenuous situation regarding the Pascua-Lama mine. But nonetheless, if Barrick has got problems and then this little startup has problems, I think you have to say from A to Z, from alpha to omega. I mean, I think you can look at almost anything and have to have some suspicion. Obviously, common sense prevails. If they're in production, they still have a margin, they're still profitable, chances of them going out are slim. On the other hand, if they're unable to raise capital, they need a great deal of capital, then you're smart probably to stay away from that kind of a company.
There were a lot of factors that pushed up the speculation in this market. The euro crisis, Greece, China, and India's growth. All those things that were there really helped this engine chug along. They're gone. So why wouldn't gold and silver return to pre-speculation days or prices?
Because they're not gone. I mean, this is where we have a difference of opinion. I mean, I think that we're probably in worse shape than we were when we had the 2008 financial crisis. I mean, we might have a temporary betterment here in the United States, but I mean, China's banking system is having all kinds of problems. And if you look at the telltale sign objectively, and what's the telltale sign? It's the debt markets. There's nothing bigger, more important to watch than the bond market. And the bonds, and the United States bonds, the sacrosanct, stalwart, best investment you can make, in quotation marks, I don't believe that, is the long-term treasury or the T-notes. And these are up substantially in interest. They're up like 60% over about a year ago. And so when interest rates go up, bond prices go down, and that's a sign. The more that there's disbelief in the ability of these bonds to be worth what their face value is, the higher interest rates get pushed up. Agreed, they're still very, very low, but they're substantially higher than they were, again, about a year ago. So what that says is the market itself, not the Fed, not the all-powerful, almighty Fed, but the market itself is starting to say, you know what, I don't trust your ability to pay these back as much as I did before. So I don't think that we are out of the situation that caused the safe harbor status of gold. I think it's more of a mad rush by the powers that be to keep the price looking bad for gold, because in the situation that I believe we're in, if we were seeing gold prices moving up past the $2,000 level, there would be a mad rush in. See, people love to buy gold at 2,000. If it was up at that level right now, they'd be rushing into it. But now that it's really on sale, oh, no one wants it now. They shouldn't have bought it. Why they're getting out of it? I mean, why should you have it? And this is investor psychology. It's a psychological battle as much as anything else. And I've watched it for years. So the stock market's totally illogical.
All right, I have no reason to dispute what you just said. I buy it. I also believe that what I said was true. It's more like both sides of the coin are correct as far as I'm concerned. Now, I was watching CNBC the other day last week, and all of the pundits were saying that gold is no longer a safe haven. Buy stocks. And that's got to affect the mentality in the U.S., right?
Oh, it does, yeah. I mean, first of all, if you look at your average hedge fund, I mean, they're there to make money. So are we. I mean, the Morgan Report, we're going to do something outside of the gold and silver space next month, but I don't want to get off track here. And they're not making money in gold. They're going to find something that they can make money with. And if it's stocks, it's stocks. And they're going to move out of their positions. And these guys carry big positions. And if a lot of them are kind of herd followers as well. And they'll say, yeah, gold trade is off. We don't want to see gold right now. Get out of their positions and move into the stock market. And I'm nothing against it. I'm free market. I mean, but my point again is that as far as the risk on, risk off thing, I don't buy that. I don't buy that for being the reason. The reason is more maybe that, stocks are moving and gold isn't, and gold's going the wrong way. That's obviously I'll buy that. But I'm not going to say that the reasons or the fundamental facts for owning gold have gone away. No, I disagree with that.
Can we put the bull market aside now for 2 or 3 years?
Yeah, I mean, when we first got that high in silver and gold, I mean, first it was silver at 48 in April 2011 and September for gold. And I knew that it would take a while, and I forecast after looking at it a little harder, a couple years, and we're there, plus some. But I, again, don't think we have much further to go. Obviously, if you haven't been in this market, you have a good opportunity. If you've been in the right sector for a while, you want to buy something low and cheap and undervalued. There's nothing cheaper or more undervalued than these mining companies are, as long as you pick the right ones. And then gold and silver itself. I mean, both are selling pretty much at the cost or a little bit lower than the cost of production. Platinum is another one. I mean, South Africa produces about 80% of the world's platinum, and I mean, those mines are being devastated. So, if you're a platinum investor, which is, a rare bird, but that's a pretty good investment as well for the longer term. So, and it's diversification. I mean, I don't want to make excuses, but I've never said to anybody you should load up and only have gold and silver. I've done the contrary. Now, some of our readers do, but, I can't control that. But it's never advocated that that's the only sector you should be in. I consider it to be probably the best, most important sector to be in, but only part of your investment portfolio.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
You know that I spent quite a bit of time in 2011 and the early part of 2012 interviewing someone who you've quoted several times in our broadcast, Jim Sinclair. And Jim, albeit highly educated and skilled in money markets for many years, just got it wrong, like so many other pundits, with his predictions of $2,500 gold and several other benchmarks last year and the year before. The prognosticating has been, for the most part, way off.
It's tough. It is tough, and you lose a lot of credibility, integrity, and everything else. I mean, again, I've tried my best to, if you look at where I was at, I thought 26 would hold. I really did, and 1550 on gold. I did get a message out to our paid list before it crashed. It was obvious just beforehand to me that it was going to go through there. You asked me if 20, would hold. I said, it might, I'd done a video before that for our members saying at 19, and, we're a little below that. I mean, these commodities hate round numbers. I mean, we could see the bottom already. I don't know. I mean, I'm not saying it is yet. I have to see more data, but it certainly is close. I think that there's so much capitulation. It's a spike low. I look for that. We see the sentiment is probably as bad as I've ever seen. And these mines are starting to, go on care and maintenance, like this one that was on our list. And another one a couple of months ago we had to take off the list. Doug Casey's group had that on their list as well. And so we're starting to see signs that are very strong indicators of a bottom, and like the bottom. So I'm hanging in there. I don't see any reason. The fundamentals have changed. I mean, if they had really gone, and there really is new prosperity and all kinds of new jobs, and people out there that want to work hard, have a choice of 2 or 3 jobs, and they're all high paying, and all that was going on, hey, I would admit it. I'd be objective. I'd say, you know what else, you're right. This thing's turned around. You probably should consider doing this or that. But that's not what's taking place. And these banks, are having all kinds of problems still, and the debt servicing is becoming more onerous as we, every day. So the fundamentals, again, are strong to be in a position to own gold, and it's basically on sale. I mean, you still see China and India increasing their position. Russia's increasing their position. I mean, India's trying to dissuade their population from buying gold, and they're not having anything to do with it. It's like, all right, tax us more, or put an import fee on it, or do whatever you're going to do. We want gold. So it's the East-West mentality. There's a lot of things. I mean, I could go on and on. I think I should stop.
Well, there's still a shortage of supply, especially in retail locations in Asia, isn't there?
Yes, there's a great demand for physical in the Asian countries. I mean, they have had histories, and they know their family history better than most in the West. So they know from their parents, their grandparents, their great-grandparents, the history of what fiat money really does and why it's important to own a real asset. Then that isn't lost on the younger population. So when they get money ahead, and they're savers to begin with, if they're willing to save in gold, and again, for them, it's on sale, they're happy. They're happy to buy low.
You mentioned a new direction for the Morgan Report. Are you getting into the biotech arena or tech stocks or anything like that?
Yeah, we look for value, and there is a couple things. One is, yes, it is biotech. If I can help my people make money, I'm going to do it. This thing is very undervalued. It's a pretty interesting story, and we're going to put it out there. On that same frame of thinking, there is a company that I'm involved with, kind of on a startup, and we don't know if it will be a public company or not. Of course, I will disclose that I own the shares if it happens, that generally speaking in the biotech space, very interesting story. It has to do with kelp. And this kelp situation actually helps to bring the farm salmon back into full health. And that's one of the main things, but there are other things that this does as well. So it's kind of an interesting story. I am involved with it, again, at kind of the beginner level. So, I'm not trying to stop my expertise in silver. I'm not claiming to be a biotech expert at all. In fact, this company that I'm referring to with this kelp situation was one that I was involved with some of my friends. And we were looking for some silver properties, and we just couldn't find any that really met the level that we wanted. And so this other opportunity kind of came, and the more that we delved into studying it, the more interesting the story became. So again, I don't want to go off on a rabbit trail too far, but yeah, we're going to look for opportunities, and that's why I changed it to the Morgan Report so many years ago, because being in the investment field investing, I should say, since I was 16, I know trends come and go, cycles come and go, and I love what I do. And there will probably be a time when it's not the right thing to be in the metals. I'll probably make that argument for the last couple of years. But if I wanted to keep writing, exploring, investing, whatever, the Morgan Report doesn't necessarily mean it's a silver investment, a gold investment, a potash investment, or whatever. It can be whatever. And so, yeah, we're taking a look at this biotech company and the kelp situation. That's a TBD, to be determined. But it is an interesting concept, and the field work's still being accomplished on that.
We know that many of these mining companies are going to go away, but the public entities won't. The shells won't. Back in the late 90s, there was a plethora of these Canadian companies on the Vancouver Exchange, as it was called at the time. They were internet concerns, tech concerns, biotech concerns, a variety of enterprises. Are we going to see the sort of sector spread into everything again with some of the same people or players, so to speak?
Oh, yeah, you'll see that. I mean, at some point you will, and it's probably already beginning. I mean, there's nothing like a Vancouver promoter. They'll find something to do, you bet. Hopefully it's for the greater good. I mean, the free market is all about finding opportunities that are beneficial to not only the shareholders, but also to the public at large, and that's how it's determined if the company is really of value or not. Unfortunately, especially in the small stock space, there's a lot of games that can be played. It happens in the big companies too. I mean, let's not forget WorldCom and Enron and some of these other characters out there. But you got to be careful. Stocks are risky, but no, I think you're correct, Ellis. These shells will go from being a mining company to being a XYZ, you name it, type of stock. Sure, that could happen.
Well, we look to the Morgan Report to guide us through the coming months so we can potentially profit from all of this.
Thank you. We're doing our best. Again, I think that we're going to see the bottom here fairly soon and back up. I don't look for a big snapback rally where we're going to see silver and gold just bolt ahead, although I wouldn't rule it out, but it sure isn't active.
Well, David, it's always a pleasure to visit with you. Thanks again for joining me today on the program.
Thank you, Ellis.
I've been speaking with David Morgan of themorganreport.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com, or download the entire Ellis Martin Report on iTunes. This segment has been sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.